Hey everyone, welcome to Channel Name, your go-to for stock analysis. Today we're diving into Carriage Services Inc., NYSE CSV, a leader in funeral and cemetery services. Can its stock hit $1,000? Likely not, but let's break down why with a deep dive into strengths, weaknesses, margins, debt, dividends, and future outlook. Subscribe and like for more. Carriage Services, founded in 1991, operates 170-plus funeral homes and 30-plus cemeteries across 33 states. 2024 revenue, $410 million, but net margin slipped to 7.8%. Stocks at $44.14, market cap $692 million. Strengths, stable demand, death rate -2.8 m/year, strong aftermarket revenue, 20 to 25% from pre-need plans, and green funeral services aligning with ESG trends. Weaknesses, high debt, $600 million, intense competition, and rising costs, 8% in 2024. CSV faces giants like Service Corp, International SCI, and Stonemore. Its EBITDA margin, 25.2%, solid but below SCI's 28 to 30%. Net margin, 7.8% in 2024, down slightly from 8% in 2023. Historical trend, stable but declining, 0.1% annually. SCI's scale gives it an edge. CSV's aftermarket focus helps but debt drags. Margin growth needs cost control. Debt's a concern. $600 million, net debt EBITDA 3.5x. Can they pay? Yes, with $75 million cash flow in 2024, but interest eats 20% of EPS. Side revenues, pre-need plans, $100M stable, and insurance commissions, $20M. These boost liquidity, $50 million. Balance sheet impact, cash flow solid, but high leverage limits flexibility. Acquisitions inflate goodwill. IPO in 1996 at $20, total return, plus 350%, 8% annualized, dividends included. Last 5 years, plus 50%, 8.5% yearly, but lags S&P 500's plus 80%. 2024 saw 15% gains post-COVID recovery. Early investors won, recent ones did okay. No clear 2040 2050th plans, but CSV's betting on acquisitions, 1-2 yearly, digital platforms, $10M/year, and green funerals. 2030 goal, 5% organic growth, aftermarket to 30%. Aging population boosts demand, risks include regulations and labor shortages. Optimistic, $600 million revenue by 2030. Quarterly dividends, $0, 45 share, 1.02% yield, 10-plus years consistent, 2.5% annual growth, payout ratio 15%, very sustainable, but not a dividend aristocrat, needs 25-plus years. Yields below S&P 500's 1.3%, not ideal for dividend hunters. Short term, 1-2 years, 15 to 35% upside to $50.60, but low yield. Long term, 6 to 8% annualized. Versus S&P 500, CSV plus 15% last year versus plus 16.9%, 10-year, 7% versus 11%. Matches MSCI World 7%, but trails Nasdaq's 15%. Stable but not a growth star. CSV won't hit $1,000, needs unrealistic 20x growth. It's a steady pick for stable demand and modest dividends, but debt and competition limit upside. Buy for value. PE approximately 14, hold for growth. Thanks for watching. Comment. Would you invest in CSV? Like, subscribe, and see you next time.